All right. Okay, thanks everyone for joining. I know there's a lot you could be doing right now, so I want to thank you for taking the time to be here. And start by saying, as we have in previous weeks, that if you've been feeling overwhelmed by all the information that's out there and having trouble navigating it, definitely want to validate that up front, because there's a lot and it's confusing and it's changing from week to week, and the SBA released new guidance yesterday. So there's a lot out there. So our goal for today is to help you cut through it, share what we've been learning from previous sessions, from our own research, and from nonprofits and community partners. Another goal is to learn from you so that we can incorporate that information, gather what we've missed, and share it with others. So as Andrew said, please share your experiences and send questions using the chat box, because we would love to hear from you. I'm going to start by sharing the summary memo that we put together and briefly walk through the various sections which are oriented by audience. It's available on our COVID-19 resource page, and we'll be sending you the link after today's town hall, and we are updating the resource all the time. So the majority of our time today will be spent here on this first section. If you're thinking about operational expenses, thinking about how to pay your employees suffering economic injury because of COVID, we'll be talking about the loan programs available under the economic stimulus package, the CARES Act. The two programs are the Paycheck Protection Program, which we're going to call the PPP for short, and the Economic Injury Disaster Loans, which we're going to call EIDLs for short. And just going back to things changing week to week, since our virtual town hall last week, applications for the PPP reopened, and some additional guidance has come through about eligibility for loan forgiveness. And as far as we know, the EIDL application is still closed at this time. So we're waiting to hear more about that. So we'll be talking about the PPP, touching on the EIDL. We'll also cover a few relevant provisions of the CARES Act to nonprofits and their workers or clients, and also talking about the Families First Coronavirus Response Act, which was the legislation passed before the CARES Act. And then towards the end, we'll move on towards, to sources of local funding and support for nonprofits and their clients, and touch briefly on funding available to communities if you're located in other parts of the state, and then information you can share with donors or those who'd like to volunteer and find ways to help nonprofits. So at this time, I will turn it over to Rahul to talk about the Paycheck Protection Program.
Can I jump in for 1 second? Sorry.
Oh, yeah.
I'll share what we have in terms of this poll so we can see where folks are at. So you can see here, most everybody's heard of PPP, or applied to PPP, but not to EIDL. About half of the folks here have been approved for the thing they've applied for, which is nice to see. So that should maybe give us a bit of context for the rest of the conversation. Thanks everybody for taking the time to respond to that.
Thanks, Katie, and thanks, Andrew. Good afternoon, everybody. So as they indicated, my name is Rahul Keshap, and I am an attorney, and it's my pleasure to serve on the board of the CNE. I can't say enough good things about the CNE, so if you are an organization that belongs to the CNE as a member, then congratulations, you have made a very wise decision. And otherwise, if you are new to learning about the CNE, I really, again, can't recommend them enough. Full disclosure, I volunteer for them. I'm on the board, but I'm also just a huge believer in what they're trying to do in terms of building stronger community through stronger nonprofits. And so hopefully you all are seeing the benefits of that in terms of the work that Katie and Andrew and Ian and others have done. The memo that Katie shared with you, I think, is a fantastic resource. And so as you hear details from me and from others throughout the webinar, please do keep that memo in mind, because if there are details you're not catching, you can always follow up with us afterward and we'll direct you. But the memo is also a great place to just check your understanding and go for further links. So as we talked about, I'm going to kick off with a discussion around the Paycheck Protection Program. So this is a massive part of the $2.2 trillion CARES Act. It was originally funded for $349 billion on March 27th when the president signed the CARES Act into law. And then just last week, it was funded again at the $310 billion level. So all told, you know, 2/3 of $1 trillion are going to be flowing through the Paycheck Protection Program. It does sound like most of you all are familiar with it. I'm going to continue to cover it at a high level for everyone, because if you haven't yet taken advantage of it, you know, it's something that you should think about trying to get involved with. Despite the numbers, unfortunately, there is really no guarantee that there will be enough funds left in the program. In fact, most people are expecting it's going to be oversubscribed. At a high level, the Paycheck Protection Program is intended to be a short-term loan for businesses in order to essentially help them hang on to their payroll for 8 weeks or so. The great news about this is that it's a loan, but it's also a forgivable loan. So the federal government is going to be, you know, really looking at the process for awarding the loan funds, and then ultimately, if you follow certain requirements, you should be able to have all of those loan proceeds forgiven. So great news there in terms of helping folks hang on to their staff during the middle of this crisis. At a very high level, the idea behind this loan is that you should look backward to 2019 and calculate what your average payroll month was for you know, each month of 2019. So look at all 12 months and then divide by 12. You get to, you know, 1 month of average payroll, and then multiply that by 2.5, and you get to the amount of payroll protection program loan that you could expect. So just to use a very simple example, if your average monthly payroll in 2019 was $10,000, then you would multiply that by 2.5, and you would end up with $25,000 as the total amount of your Paycheck Protection Program loan. Again, most of that can be forgivable as long as you follow certain requirements and details. I'm not going to, you know, cover every element of this in, you know, the amount of detail that you might need, but what I will say is, you know, hopefully you all are already in the process of reaching out to banks, or if you've already applied for or received your Paycheck Protection Program loan, maintain that relationship with the bank, because these details are going to continue to change and adjust as we go along. The Treasury Department, along with the Small Business Administration, continues to issue new answers to frequently asked questions, literally day by day. So if you'll go to their FAQ section, they are adding to that, you know, at least every other day or so. And so details are changing, and banks may ultimately end up having to come back to you with requests for more information, or as we shift out of this process of awarding the loans and move towards the process of evaluating the forgiveness portion, you may find that banks need more information from you. So maintain that conversation with your lender and make sure that you are doing whatever you need to do to maintain the possibility that the loan will be forgiven. So at a very high level, you know, payroll is broadly defined for this. And so what that means is it covers certainly payroll costs in terms of employee salaries, wages, commissions, tips, but it also includes things like expenses for paid sick leave or vacation, medical leave, even retirement benefits and severance payments, and the taxes, the state and local taxes assessed on those. So payroll is really defined pretty broadly. You can go even farther and use this, this loan on things like insurance or mortgage, rent, and utilities. But the part where I would caution you is that if you want to have 100% of the loan forgiven, you should make sure to keep your the bulk of the loan proceeds used for payroll. What that means is 75% is really your threshold. So to go back, you know, if you got a $25,000 Paycheck Protection Program loan, figure out whatever 75% of that is, which I think I've used a bad example, but somewhere, you know, under 20,000, and make sure that you spend at least that much on payroll expenses. There are other requirements as well that you need to be thinking through. So you need to be calculating how many full-time employees you had going into the crisis, and making sure that you maintain your full-time employee level. That's that FTE number. So whether it's a combination of full-time or part-time employees, calculate what the FTE is and make sure that you maintain that, because if you drop below, either because somebody quits or is laid off or for whatever reason, you may end up losing a portion of your forgiveness. So make sure that you know, whatever the FTE number is, essentially you have until June 30th to get back to that FTE number, and that will preserve the 100% loan forgiveness. The other portion of this is make sure that when you're looking at salaries and payroll expenses for any one particular employee, you need to make sure you don't reduce their salary by more than 25%. So again, the thrust and idea of this bill from Congress and the president is to maintain payroll and maintain employment and maintain salaries. And so if you reduce any one employee by more than 25%, you may end up losing a portion of the loan forgiveness there as well. As I said, lots and lots of other, you know, limitations in terms of things to think through, you know, what exactly counts as payroll. It's pretty broad, but there are some details there. You should also be aware that if you have employees who are making more than $100,000 a year, you would essentially be able to only cover through the PPP up to $100,000 of their salary. So those are details to make sure you understand and are aware of. Andrew, maybe I'll pause there and just see. I haven't had a chance to be able to look through the chat. Are there any questions coming through on the PPP that we can answer?
I haven't seen any come in now, but if you have a question, feel free to pop it on there, or flip your video on and raise your hand, or just unmute yourself and start talking. That would work too.
There we go. I'm seeing one question that I think went just to me, so I'll just read it as it comes through. It says, what if nonprofits have an independent contractor as an executive director, so not an employee? That's a great question. And so if you have any independent contractors, whether that's an executive director or anybody, those individuals would not be considered part of your payroll. The idea being that independent contractors should be able to apply for their own loan through the payroll protection program. And so the way that the government is essentially parsing it out is that you can calculate your employees in terms of full-time or part-time employees, but independent contractors would essentially be on their own to apply for payroll protection program coverage. So your executive director in that case would be someone who needs to apply herself or himself for coverage under the payroll protection program as a self-employed individual. Any other questions that people have on the PPP? Yeah, Anna, please.
Hi, thank you, everyone. I just have a question, Rahul. I've been hearing a lot that the forgiveness part and the record keeping needed is sort of still up in the air, and it just is obviously anxiety provoking to take on a loan that then you're not really sure what the forgiveness looks like. Do you have any guidance on, you know, besides normal accounting record keeping that everyone should be doing? Is there anything else just sort of to keep covered or extra insurance that we can do as record keeping for this?
Yeah, that's a great question, Anna. And I think, you know, on the one hand, I would say this is constantly changing, and so we're going to learn more. As Katie alluded to, we are expecting that the Treasury Department and the SBA are going to issue additional guidelines on the forgiveness portion. You know, essentially, they are trying to stay just ahead of their homework on this. So they focused initially just on the process of eligibility. Then they focused on the process of, you know, distribution, and now I think they're going to be moving very quickly to the process of the loan forgiveness. On the one hand, I think it's starting to become controversial just because there are some large companies that have been able to find their way into getting PPP funding. And so you don't know what that means for everybody else. This was intended to be for small businesses, which means 500 or fewer employees. The loan itself is intended to be favorable, so it's a 1% loan. So even, if it doesn't get forgiven, you still have yourself a good loan, but of course a good loan is never going to be as good as a forgiven loan. The short answer is, goes back to my saying, stay in touch with your lender and make sure that they have a good handle on what they're hearing from the SBA. We'll, of course, continue to share that information, but, it's just good to know because they're the ones who are actually going to be really in the middle of this process for you between the nonprofit and the federal government. The second part of that is, as you said, good record keeping. So, part of it is just making sure that if you have payroll expenses, use these loans for those payroll expenses. Money can be moved around, of course, and so it's a little hard to prove that you use these dollars for that payroll. But make sure that there isn't any reason for someone analyzing this to think that you use that money for something else entirely. I'll just use a bad example. If you're fundraising for a building fund and trying to raise those funds right now, the last thing you should be doing is taking your PPP loan and dumping it into your building fund. That's just an easy indication to people who are analyzing this to say, wow, you didn't use that for payroll at all. So use this money and put it exactly where you would put your operating expenses that would be used for payroll. And then, the other part of this is going to be proving the forgivability elements that I talked about in terms of keeping the FTEs where they need to be, the total number of full-time employee equivalents, making sure that you are paying employees at the level that they need to be paid, which is at least 75% of their prior salaries, and then making sure that you spend at least 75% of this loan on payroll expenses. So thanks for that question. Gwen, did I see you had a question?
Thank you.
Hi, great to see you, Rahul. My question is, I have a few contractors for a few different types of services that pertain to the nonprofit. What is the minimum amount that a contractor has to be paid to be able to apply?
So it's a good question. And just to make sure I'm clear, you're talking about contractors that would be applying in their own right for the PPP.
Correct.
They're not employees of yours, and so they wouldn't qualify to be part of a PPP application. I have seen some lenders state a $10,000 minimum in terms of, I guess, just the threshold they're looking at for what would justify the paperwork on their side. But I have not seen that for all lenders, and I haven't seen any particular minimum across the board. Katie, have you seen anything in terms of limits or guidelines on how much or how little someone can apply for?
I have not, no.
Yeah, so presumably they should be able to make their application. And anecdotally, we hear from some lenders that they are, essentially feeling like they're already oversubscribed. Whereas I just got a tip from a local bank that said that they think PayPal is still accepting applications. And so, if you're in that scramble and you're looking for lenders that are still processing applications, you could try PayPal. I can send you the link I found, but I think Googling it would probably work just as well. But either way, keep looking for lenders. If you think your bank is oversubscribed, you can only ultimately submit and receive one PPP application, but it doesn't mean you can't essentially start additional applications if you're trying to figure out which lender is the one that'll actually be able to process funds.
Thank you.
Yep.
That's helpful. And as far as finding a lender, we have heard that Virginia Community Capital is accepting applications. We have a link to their website within the document. And we've heard that nonprofits are having an easier go with smaller community banks if working with the bank you're already working with might not be an option. That smaller community banks can be a good option to explore.
That's great. And I'll just direct everyone to the chat. It looks like Steve has shared. He says, our nonprofit uses an independent contractor as an executive director. She applied for the PPP, and if she receives it, we will not pay for her services during the 8-week period she receives the PPP loan proceeds. We have a very tight budget, and even though it is only 8 weeks, it will be very helpful for us. So some great points in there. Thank you, Steve, for sharing. First, you should absolutely apply for it if your nonprofit meets the criteria. You have to be a 501c3, which is a charitable organization, or a 501c19, which is a veterans organization, if you haven't heard of those. But this is absolutely what the loan proceeds were intended to do and to cover, which is payroll for individuals who otherwise would have their organization really strapped for dealing with this situation. The second point that Steve makes is also a good one, which is don't ever double dip. So if you are receiving PPP funds to cover your payroll, and then you might be getting other loans, or you might be getting other grants from the federal government or elsewhere, don't say to two different individuals or two different groups that you are spending their funds on the same expense. Make sure that if you got PPP funds, you spend it on payroll. And if there's other payroll expense that you can spend other funds on, that's fine. But don't ever say that the funds were essentially double spent, because that's going to cause a problem for the federal government, and that's going to cause a problem for you.
I just wanted to mention an upcoming training we have. It's not until May 19th, but we have an HR specialist coming in to talk about layoff and furlough and what the differences between those are, and how those can affect your organization, and how to sort of manage those relationships with employees. So I'm going to post some information about that, and I'm sure if you wanted to reach out to her name is Jennifer Atkins, before then to ask some questions, she'd be happy to talk to you.
Thanks for that, Andrew. If I could, I think Marcia noted to everyone, she said this is helpful, so thank you, Marcia, I'm glad. And a question about credit unions. As far as I know, credit unions are also active in issuing these loans and and lending out funds. I don't have any specific insight into the University of Virginia Community Credit Union or others in terms of where they stand. But if anyone else, Katie, if you or anyone else has insights on credit unions, I think Marcia's looking for some more details.
Yeah, the one that we have on our list that was accepting, though I'm not sure if they're only working with current clients at this time, is UVA Community Credit Union. I know they were definitely on that list in the beginning.
And maybe I'll just keep going with Kara's comment to everyone. She said, we are a UVA affiliated nonprofit, and we're told to apply through United Bank, as they are accepting applications from organizations without a pre-existing relationship, which was important for Kara's nonprofit, because they bank through UVA and they have no direct banking relationship. So great advice there. If United Bank is continuing to accept applications from non-clients, that's a great tip. But again, I think being active and reaching out as early as you can is really the best way to go here. And potentially at this point, submitting multiple applications, keeping in mind, of course, that you cannot ultimately complete multiple loans. You really only can get one PPP loan.
And Rahul, around forgiveness or eligibility for loan forgiveness, I saw you provided some really great advice earlier today around the SBA's recent guidance that the PPP loan has to be necessary to support ongoing operations. Could you talk a little bit about what necessary means?
Yeah, it's a great question. And, I guess I should have probably insisted on all of the normal legal disclaimers at the front end, because, legal advice is going to be really tough in this situation when things are unsettled. As I said, there are a number of larger companies that have essentially grabbed the PPP funds. And, sometimes it's one bad actor that can kind of ruin it for everybody. So there are going to be some questions around what forgiveness really means in this case and what merits forgiveness. Part of that is also, who is really eligible for the loan. At a very high level, I tend to think that any nonprofits that are working in good faith to apply for and receive PPP funds are going to be in good shape. I mean, I just don't think it's going to be a high priority for the government to go after nonprofits in this situation. That said, I mean, I think you should always, be as careful as you can be, and you should make sure that you have a good understanding that the PPP funds are really intended for you as a nonprofit or as an organization or small business to be able to continue your operations during this crisis. And so it's not a very stringent standard in that, you know, you don't have to certify that you would go out of business if you don't get the loan. But the idea is that the crisis should be having a significant impact on your economic viability and, you know, your economic situation. And essentially that the PPP funds will be necessary to support ongoing operations. So there's a lot of wiggle room in there, and there's a lot of confusion right now, which is why we are waiting for SBA, the Small Business Administration, to provide more guidance on what this actually means, because people don't like you know, the prospect of being kind of held to account for forgiveness when they don't exactly know what the rules are. So unfortunately, we're all kind of operating in this world of uncertainty right now. What I would say is, you know, maintain good faith, maintain your focus on using these funds for payroll. And if you have, you know, vast resources that are beyond, you know, what a normal nonprofit would have as operating expenses, then you probably should talk to your lender and talk to perhaps your attorney about how to make sure that as you go through the process, you know, you don't have any concern with scrutiny that might come through. I know that essentially through the process, the SBA and the Treasury is saying that if there are companies that have received PPP funds and ultimately decide that they were not appropriate to receive them, they can essentially pay them back and walk away by May 7th. Which I know is a very short deadline, but May 7th is essentially their deadline for saying, you know what, we were not a good PPP applicant to begin with, and we can walk away with no penalty. My guess is that nobody in this webinar is going to be close to that, but again, if you feel at all concerned that, you know, the PPP proceeds may not really be something that your organization needs during this time of economic instability, I would definitely urge you to get professional advice.
Thanks, Rahul. And we were talking earlier about when that SBA guidance comes through, a plan to send that out to everyone who's participated in the virtual town halls, so you have it when that official guidance is released. And I was on a phone call with the National Council of Nonprofits, and they provided a resource that I thought was really good in the meantime about loan forgiveness. So in the meantime, we've linked to that resource in our summary, but we'll send the SBA guidance when we have it.
Thanks, Katie. So back to you if you want to talk about the EIDL loans and beyond.
Yeah, sounds good. So I know when we asked about the EIDL loans in the poll, there was a lower percentage of people who had applied, and applications did close April 16th, and they haven't yet reopened. There's a chance that they will, and more funding will come through. So I'll touch on them briefly. If that funding does come through and you'd like to apply for one of the loans, they pre-existed the CARES Act. And the CARES Act put more money into the already existing program, expanded eligibility, and waived certain requirements that previously existed. So, for example, these kinds of loans existed and were given to nonprofits around Hurricane Katrina and Hurricane Sandy. So eligibility is broader than the PPP loans. It's open to 501c, D, and E organizations. And it can cover a broader range of expenses. So it can cover payroll, sick leave, fixed debts, accounts payable, rent or mortgage payments, and other bills that can't be paid because of the disaster's impact. Unlike the PPP, the loan is not forgivable. So it's money that you have to pay back, and it has a low interest rate of 2.75% for nonprofits. The terms and amounts are determined on a case-by-case basis. The last we heard when the loans, the last time they were open, was that they had been limited to $15,000. That might change, but as far as I know, that would still be the case. And limited to 2 months of operating expenses. A key thing about these loans, if they reopen, is that you can ask to be considered for what is essentially an emergency grant. That's the language the CARES Act uses. It's also referred to as an advance of up to $10,000 that doesn't have to be paid back, even if your application is denied. And the grant is prorated based on number of employees, so 1,000 for one employee. Let's see, when these applications first were released, they were taking a long time to fill out. As of 2 weeks ago, they had been streamlined and taking about 20 minutes or so. A lot of the same considerations would apply with the PPP of talking with your board and making sure that if these reopen, that you can take on this loan. And we linked to the application within our summary memo so you could see what's asked, as well as the application through the SBA website. So if we hear that the EIDL is reopened, we'd send out that information as well. Okay, so I'll pause there. Andrew, are there any questions about the EIDL loan before we talk about other relief under the CARES Act?
Again, I haven't seen anything pop up, but if you do have a question, feel free to just jump in now.
Right, and one thing I forgot to mention is that you can apply for both the PPP and the EIDL. But as Rahul mentioned, this is one you can't double dip, so you can't use both EIDL and PPP funds for the same expense. So the EIDL can be used to cover a broader array of expenses, but the PPP is forgivable, so that would be the better option. But if the EIDL opens, we don't see any downside or reason not to apply and request to be considered for the emergency grant as part of the process. And you can always decline to take the EIDL loan, but if you do receive any emergency grant, that will be subtracted from the forgivable amount of the PPP. So, because the EIDL is a stay tuned if it reopens.
So there's a comment here. I'll just read it aloud. I applied for an EIDL loan on April 5th and I've heard nothing. I talked directly to the SBA EIDL 800 number today, and my loan is still in the first stage and hasn't even reached the verification process. Just thought I would throw that out there in case others are wondering how long these are taking.
That's really helpful to know. I think anecdotally, we have heard reports of people simply getting the EIDL advance deposited into bank accounts without any real acknowledgement on the loan or any other kind of communication. And so a bit strange, but it's entirely possible that the first action you might see is actually dollars in the bank account. I think, again, just a sign of how much the federal government and the SBA are scrambling on this. But that's what we're hearing, is that, you know, you might just see money in your account.
Yeah, and Steve, that's helpful too for referencing the 800 number to check on the status. We have that number within the summary. If you already applied and want to call them and see where it is, we've heard that people have been getting luck with getting someone on the phone to check the status. So thanks for mentioning that.
Oh, Katie, if I could, one thing I wanted to mention before I forget is that the Central Virginia Small Business Development Center is a great local resource. You know, they have been working all along the way to work with the SBA and essentially get help out there for businesses who need it. But especially during this crisis, I know they have expanded their consultation and hours. And so if you have particular questions on your circumstance, or you really want to get some counseling in terms of how the process works, again, I think we're happy to do what we can to help, but the Central Virginia Small Business Development Center may be even closer to this and may be able to counsel you on specific parts of the application and so on. I'm just going to share the link to their website through the chat. So if you need to, take a look at their information, which is good information, and they are a local resource for you to consider.
Thanks, Rahul. All right, so I'll move on to talk about other options available to nonprofits under the CARES Act. The first is, and these work in tandem with the Paycheck Protection Program, that employers have the option to delay the payment of employer payroll taxes for 2020, meaning that 50% of taxes would be due by the end of next year and the remaining 50% at the end of 2022. The key with that is that if you receive a PPP loan, you can delay payroll tax payments only up to the date that the PPP loan is approved, but you have to start paying them thereafter. So if you don't receive the PPP, delaying payroll taxes is an option. Another option is that the Act creates an employee retention tax credit, which is a refundable payroll tax credit to employers who retain their employees. I don't want to get too into the weeds on this one, but $5,000 is the maximum credit amount. And the credits are fully refundable to employers. So the key there too is that if you can't receive both payroll tax credits and a PPP loan. So put another way, if you don't receive the PPP loan, you're eligible for these tax credits. Some other benefits created by the CARES Act, nonprofits have an extension to file their Form 990 series until July 15th. So more room on that. The Act also creates funding for government programs, including Head Start, SNAP, Aging and Disability Services. There is funding, for example, for the humanities and the arts. So for example, Virginia Humanities has started the process of accepting grant applications if you're an arts-focused nonprofit. So there's more coming out about those federal programs. And outside of the federal programs, we have resources too in the memo about contacting vendors, landlords, other accounts payable to see what their flexibility may be around payments, and have ideas for managing fiscal stress within the memo. So I'll stop there with the CARES Act, and unless there are any questions, Rahul, I'll turn it over to you for the Families First Act.
Thanks, Katie. Seeing none, I'm going to jump into the Families First Coronavirus Response Act. So this was a bill passed by Congress and signed into law by the president a couple of weeks before the CARES Act. I think it was early March. And the FFCRA was really intended to create a temporary benefit for employees. It's important, though, for nonprofits with employees to pay attention to this, though. So essentially the way it worked is that employers with fewer than 500 employees need to let their employees know that they have new employee rights during this pandemic and crisis. Essentially, that means from April 1st of this year through December of this year. At least that's how the law is written. Hopefully we'll be finished with the crisis by then. But the idea is that if there are employees that are impacted directly by the coronavirus and what's going on in the world, and by that I mean forced to take sick leave or forced to take time off from work in order to care for others, there are now some federal statutory pay minimums that they can take advantage of. So if you are someone who is required to take sick leave for yourself because you're dealing with coronavirus, then you are eligible for essentially 2 weeks of sick leave, which would be calculated at up to $511 daily, assuming that your salary is that large. It's basically 100% of your salary up to $511. If you're paid more than that, typically you would max out at $511. And then 2/3 of your salary or 2/3 of your wages if you have to take time off to care for others, a family member or so on. Again, the limits there are going to be a limit of $200 daily and $2,000 for the full 2 weeks of pay. Separately, if you have to take time off to care for your kids, because there is no daycare available during the crisis, you're separately eligible for paid emergency leave. And the paid emergency leave is calculated at $200 a day for up to 10 weeks. So there are details here, and I think the best way for me to share that with you is to share the Department of Labor's poster. They have put out a good poster that summarizes the information, and this is information that you should share with your employees. In fact, you're required to share with your employees. So do that digitally. Obviously, we don't need to be concerned about in person, a poster. But here's the digital, or here's the link to the digital version of the poster. that you can share with your employees, and they can better understand what their rights are under the FFCRA. The good news for employers is that if you are required to pay these benefits out to your employees, you can then recover that money from the federal government. 100% of the money you pay out, you can recover from the federal government in the form of payroll taxes that you don't have to pay. So, when you file your quarterly payroll taxes, you would essentially then just inform the government that X or Y dollars were spent on the FFCRA mandatory pay requirements, and then you can withhold that from the taxes that you would otherwise have had to pay to the government. So that's just at a high level. Again, I would encourage you to look at the link, which is in the memo that Katie has put together, but it's also in the chat. And make sure you share that information with your employees, assuming that you're covered by the Act, which is all employers with 500 or fewer employees. Katie, back to you.
Sounds good. Thanks, Rahul. So I think that's the end of the section around federal financial resources and relief. So I'm going to move on to talking about, if you're a nonprofit in the Charlottesville area, local support that might be available to you. CACF is prioritizing grants to households experiencing hardship in Charlottesville and surrounding counties, and nonprofits providing basic assistance, which includes food, housing, and medical supplies. CIC, the Community Investment Collaborative, is also offering a business recovery fund, which is a micro loan program that's open to nonprofits located in either Charlottesville or Albemarle. Loan amounts are up to $10,000 with a 1% interest rate and a 3-year repayment period. And if that's something you want to learn more about or receive the application, you need to submit an interest form by May 8th, and a link to that is within the summary memo. So I know we have Anna and CIC on the call, so thanks for sending that information. Nonprofits can also post their emergency relief funds to the Support Seville website, which is comprehensive and up to date. Nonprofits can also post requests for volunteer supplies and ways to access services that you're providing. We also have access to, normally you need to come into our office to use the Foundation Center, which is a database of potentially available grants. We have remote access. So if that's something you'd like to do and research, you can contact us and we can send you the information to get going with the Foundation Center. And as far as assistance for your household or clients you're serving, a few of the resources out there, the Community Resources Hotline can help navigate access. Andrew sent a great database of local resources available in their status. So things like food, shelter, mental health, employment, and discrimination services. That's very comprehensive. And again, Support Seville's website provides ways locals can get help. And within the summary memo, there's more on how to access mental health services, more on the CA.
Andrew, did we lose Katie, or am I the only one?
Yes, no, it looks like we lost Katie. Sorry about that, everybody. Just give it a minute to see if she pops back on here.
And what you're providing that you could send to
Hey,
them.
Katie,
Yes.
we lost the last 30 seconds or 45 seconds. Do you mind backing up a bit? And
Oh, I'm sorry.
that's okay. She just froze on us.
Sorry about that. Sure. Where did you hear me talk about the Community Resources Hotline?
Why don't you pick up there and go from there?
Okay, sorry. So the Community Resources Hotline can help navigate access to city vetted resources for housing, money, food, other supplies. Andrew sent a great database that gives the status of local resources available. Support Seville's website provides ways locals can get help. And there's more in the summary memo about accessing the CACF funds for households experiencing hardship, mental health resources, resources for families and parents, emergency childcare, And we suggest a few newsletters within the summary memo where you can get the word out about what you're providing, and they're just sending great information and opportunities in the area. We also have in the summary memo, it's under the CARES Act, but a resource for workers around unemployment assistance, how to file claims, and things around, student loans, that payments are deferred from now until September. So there's more on resources available to individuals, as well as funding throughout the state, and resources or information that you might want to share with donors about how the CARES Act included a new above the line deduction. So hopefully that came through.
It did. Thanks.
Good.
I think all along the way, we just want to emphasize that, there's so much information out there, and I think all of it is an effort to get people, more options and more support during all of this. But at the same time, we completely understand how overwhelming it can all be. So, we are happy to connect with you afterward if you feel like you're just at a loss as to how to move forward and you're trying to figure this out. We're happy to share ideas from the memo and from the wealth of resources that the CNE has access to. Obviously no magic solutions in the middle of all this, but to help you wade through everything, we're glad to connect with you afterward.
And recently, CNE has a new program on financial modeling that is only for CNE members. And it's a tool to help you think about sustainability, different financial scenarios, where you work with a consultant and, if applicable, an HR consultant. And it's on a sliding scale from $0 to $250, and full scholarships are available.
Are there any questions for Kadi or Rahul right now? Well, if there's not, then I would encourage you all to reach out to Kadi or myself if you do have any questions that come up. Oh, sorry, there is maybe one question here. SJ Jahan, you can go ahead and jump in here.
Hi, can you guys hear me?
Yeah.
Okay, so yeah, my name is Shamima Jahan, but I think it's easier for everyone to address me as SJ. I'm very new to this, and these are very advanced, but I'm like really happy to see that everybody is helping everybody. And so I'm to form a nonprofit, so I'm just looking for some guidance. So I found this group, and then I thought of joining and to learn some of the things you guys are doing. So if you guys have any information that might be useful for me, I'll be happy to connect and learn more. I'm located in Northern Virginia area. And I'm still at the very early stage of forming the nonprofit. So, and it's gonna be workforce development. And professionally, I'm a UX designer. I work in IT. Yeah, so that's all from me.
Thanks for sharing, SJ. I think that's fantastic that you're still, looking to add new services in the middle of all this. It's an interesting time, but at the same time, I think the services that you're talking about sound like they could be incredibly helpful for people. You have come to the right place because the CNE and Kadi has actually put together a document on how to start a nonprofit, which is a great resource. You can find it on the CNE website, but okay. I'm optimistic that Kadi can send you the link as well, just to give you a place to start. And then, once you engage with that and move forward, happy to help answer any questions because, it's a process that can feel very overwhelming. So happy to help.
Okay, thank you so much.
Katie, I think you're on mute.
SJ, I'll follow up with you by email and hopefully we can find a time to talk.
Thank you so much.
Yeah.
Anything else before we close out?
Andrew, do you see the question from Wild Virginia about financial modeling with the CNE?
Yeah, yeah, and I just put a link in chat that directs you all to our website in case you want to learn more about that program. If you have further questions, feel free to follow up with me or Katie or Cindy Colson, who's heading that program.
Great. Well, I'll just say thank you all very much. And again, happy to continue the conversation with your specific questions if they come up afterward.
Thank you, Rahul, and thanks, Katie, and thanks everybody for taking the time to join.